how many of you are really looking forward for GST? You don't. As of now, it doesn't seem like. How many of you have already adopted some kind of tax technology? So, is tax technology part of your enterprise software ecosystem? Great. 2. So, tax technology is something which is quite prominent in countries, and they say proper implementation of tax technology saves your business at least 2% of your input cost. That's basically, if you are a 1,000 crore company and if your input cost is 800 crore, the set-offs and credits available, properly taken, you might save 2% of your input cost, which could be as high as 160 crores or 16 crores, right? Now, the entire scenario about tax technology and what GSTN is doing, I'll try and put it in next 1 or 2 minutes. What's GSTN ecosystem? GSTN ecosystem first starts with GSTN. As you will understand, to carry around 3 billion transactions per month and have those transactions persisted for 8 years, 6 years to 8 years, which is the auditability period, that's one of the mammoth data warehouses that's ever built and that's ever maintained, right? Globally. Globally, we don't have any country maintaining these kind of transactional data from each and every company to this size. What are they planning to do? What is their entire goal as GSTN does it? They want to track the supply chain from a ore to the product, 8 people in between. So let's say we have a company A in cement business giving a product out from the ore. What is their supply chain value and is it comparable to another cement company? A cell phone company, is it comparable to other company? So that's where your future audits are going to be raised. So that's what GSTN is trying to do with its mammoth system. What did they open up? So they said, we can't be dealing with 8 million companies directly interfacing with us. So they kind of created their own supply chain, and the first element in the supply chain is somebody called GSP. What is a GSP's role? GSP is like any messaging server that you probably use now, a TIBCO server, a BizTalk server. GSP's primary role is to transfer data from one place to the other. So who actually encrypts the data? A tax technology, or in GSTN's world, it's called ASP, is given a token by the GSTN or is given an OTP number by the GSTN, which is used to encrypt the data. That encrypted packet is then put in another envelope which GSP gives. The envelope is then transferred to GSP. GSP opens the outer envelope. The encrypted envelope is still there. That encrypted envelope is put by GSP in a second envelope, which is then relayed to GSTN. GSTN has the key to open the inner envelope. The inner envelope, GSP has no option to open that envelope. It cannot persist data. It cannot process your data. So what's primarily important for you is what is the ASP that you are using, right? So I'll switch gears and now go to what is switchover readiness for your GST readiness, or what is the switchover. So let's assume July 1st is the date, which can be extended by a month or 2. September 16th is the constitutional obligation. So maybe let's say July 1st or August 1st. If you are switching over on July 1st, what are the first 3 or 4 things that you need to be ready with? The first thing is internal system readiness. Am I ready to do my business from tomorrow? In your supply chain software, in your ERP software, in your e-commerce software, are you ready with all the tax scenarios put in. Now, the first and foremost is your master data ready? Is your master data changing? What is changing in master data? Your item masters need HSN. So, as we understand, a lot of ERP companies are giving you patches, if not they have given you already, or they're in the process of giving you something. So, item masters will need to be added with your HSN codes or SAC codes. Now, what is the other big difference, right? The supplier masters should now require you to put in GST-IN numbers. The customer masters, if they are B2B customers, you again need to put GST-IN numbers. Now, do you have you already started standardizing your masters for GST? If not, start doing it in Excel sheets or start doing in some other system that you can. We have an application called One Master Data. If you are using more than one source system, if you are using like a financial services company or a logistic company with 15 or 10 source softwares, standardize your master data. The option we give is something called as One Master Data with connectors to each of those source systems. You can transform the masters into one place, standardize with GST-IN numbers or whatever, and take back into your source systems with synchronization. Now, the second thing that you need to be ready with is tax determination scenarios. Now, this is a really big change for two reasons. Until now, we were in origin-based taxation system. A state like Maharashtra enjoys a lot of revenue because of the hard work it has done compared to the other states by giving a lot of industry push and growth, infrastructure push and growth. And they enjoyed the tax that it gained because it's a source-based system. Now the entire taxation is going towards place of supply or place of service, that is destination-oriented taxation. This is serious business transformation happening. Business transformation which is basically now replanning the entire supply chain mechanism. So that being said, in my personal guess, it probably will be at least 1.5 to 2 years by the time businesses will stabilize on the business transformation piece with their entire supply chain system. Is there a lot of credit being, so you're selling from Maharashtra, but you're selling in Chennai, right? Your tax is collected against Chennai. Are you buying anything in Chennai? So you can actually get that back from the government. So this is credit management and set off management, which is going to be serious money for large companies that you are heading. So going back to the point, the place of supply rules. Have any ERP system ever gave you place of supply rules? These are things that your advisors, the Big Four, maybe the KPMG, maybe the others, they plan for you. Now these are scenarios which you need to apply, right? In an origin-based system, it is easier because you don't have to worry about where is the place of service or where is the place of supply. Now these are tax scenarios that you need to be prepared for switchover. And these are two things. You have your standardized master data. That's the precedent for your applying tax scenarios, place of supply scenarios to compute. Then comes your ability to print invoices. Now, if you're using lot of source systems, if you're just using one Oracle or one SAP system, it's fairly easy, you can configure these invoices. But if you're using lot of systems and you do not have the time, or if you do not have the ability to place in these scenarios, we recommend you using an external tax engine. The tax engine is, you just give it, this is the supplier, this is me buying, this is my location, this is the item. The tax engine gives you a milli to microsecond response with what is the tax. Now, if your system, if you're a financial company and you do not want to enter into a scenario where, okay, I want to do my system is too busy, I'm an airways company, my system is too busy, I don't want to change anything, I'll create invoices as is, but I will not tax them. I will send them to a separate system offline. Let the offline system resolve the taxes and send back. That's tax determination in asynchronous mode, and you get tax resolved invoices to update your GLs and everything. Now the good thing about this is, in a monthly change system like GSTN is monthly. It's not 6 months like service tax. It's not 3 months like excise. It is monthly system, and the ability, you can, if SAP is taking so much time to give you a patch, will they be giving you all these scenarios every day, every month? That's where external tax engines will take the toll from you. So you don't have to rely on IT changes, patches, functional analysis as to what needs to be changed, how it needs to be changed. So these are scenarios we like you to cover. Now, if you are using Oracle lesser than 12 version, or if you are using SAP lesser than 6 version, you are not getting these patches. There again, tax determination comes into play. So, one last recommendation is, for at least 15 days before the switchover, you would want to run 2 systems in parallel, or at least 10 days you would want to run 2 systems in parallel, one with GST, one with, so the last 15-day transactions, just try and simulate in your sandboxes or test systems or UAT environments with GST in place. So on a daily use, this is going to be very important for you to do the switchover at that 12 o'clock in the midnight, whenever it is happening. Now, then comes the compliance readiness. Compliance readiness is lot of how would I put it? So, what is tax technology from compliance perspective from GST? Is it ETL? Is it ETL, transforming data from your source systems and just giving it to GSTN? Extraction, transformation, loading? Is it business intelligence? Producing the analytics, what GSTN wants and giving that data file? Is it business rules or tax rules in this case? Validation rules, computation rules? Is it BPM? So just imagine, you have 20 locations, 20 states you are operating in. You have 8 states where you have manufacturing plants, 12 states where you are booking transactions. Your purchase users are decentralized, your sales users are decentralized. You are doing average 10,000 transactions across these locations. Who will be reconciling these transactions? Who will qualify the data? Can your taxation team sitting in Mumbai do that? On a monthly basis, between 10th and 15th, who can identify a purchase transaction if supplier has uploaded wrongly, which impacts in the credit you take? The ability to collaborate on cloud, where you assign a particular location's purchase transaction validation to a particular user, is very, very important. Now, what are the transaction types that you need to validate? You have transaction types like credit notes, debit notes, your sales transaction, your advance payments, your B2B small, B2B large. Who are the right people to validate this data? Unless you are going to bring in a larger workforce into reconciliation, or what we call as data qualification, which starts with validation of data, correcting erroneous data against the changing tax rules, and finally qualifying or reconciling them so that data is prepared for the tax expert to then take over, review his computations and submit to the government with his signature. So look for your solution. Unless you decentralize this portion of reconciliation, and unless you can identify data by transaction type, it will be very, very difficult to process it. Now, coming to the point where a hypothetical situation I'll put out for you. Let's say you are in 2018 December and GSTN would have started September or August 2017, and your company for a particular location has an audit scenario. Audit is for December of 2017 and you are in 2018. Now, consider second thing, you have experience with service tax, you have experience with excise, and you have experience with the change. GST is a very mammoth system which is coming now, but expected to go through turbulent changes, stabilizing phase for the next 3 years or 4 years. Service tax is still not stable. Now, imagine the reporting formats getting changed. Imagine the computation rules getting changed. Imagine the rates getting changed. Imagine the metadata required to be supplied to GST and getting changed, or reporting format getting changed. Now, to process your audit and to process your regular simultaneously in 2018 December, so I am pumping out data from SAP. Fair enough. I am pumping out data from SAP for 2017 September, but the rules have changed, but the reporting formats have changed. Can a system that you are adopting version by time, meaning I load my data from my source systems in 2017, the rules, the reporting formats, the transformations are whatever are suited for that particular period are loaded. Similarly, if I am doing my regular processing in 2018 December for the November, the rules, the reporting formats, the data transformations are applied for that particular period. So this is called versioning by time, and it is very, very, very essential in this kind of business intelligence, in this kind of what we call as preparing data for compliance. You need to, there is no other choice. It's not like your CFO asking you a report. This is government demanding a report. So you have to be compliant with the taxonomy they demand. You cannot say my source system is not capturing this data. Now, so that's compliance readiness for you. Now, why do we suggest, so we thought about it quite a bit. Is compliance something which people will go on to cloud or SaaS? Do we have an option not to go for cloud and SaaS? Do you expect your ERP system or your customized taxation solution to keep up with the changes? Meaning, when I look at a business software, when I look at SAPs, Oracles, Infers, all these softwares, I look at bargaining stability in my process, bargaining stability in my operations. When I look at a tax engine or a tax technology or compliance technology, I look at adapting to the change. Do you think change cycles in your ERP is possible, whether on the customization side or on the platform path side on a monthly basis? So that's where we say, do your taxation or compliance in tax technology. Do not do it in your ERP technology, because ERP's fundamental purpose is getting you business stability. Tax technology's fundamental purpose is to comply, to help you comply. Last but least, so that's why we said a SaaS or cloud system for your compliance is the best suited system, provided we give all the securities required, all the other things, right? Now, obviously, Oracle has given us ISV partnership, so independent software vendor partnership. So Oracle will start using our product. A lot of SAP implementers have signed up as our partner. Adaequare has signed up as our partner. Infer at one level has signed up as partner. The last but least, QAD. QAD has signed up as partner. The others, we are still work in progress. There are a lot of smaller ERP solutions who are signing us up. So you can, there are other firms, tax firms that are doing it. So 4 things that I would like to say. Get your transactions going, get your master data in place before your tax scenarios are applied. Do 15 days of readiness test. Compliance readiness, select the solution which can version by time. Our solution comes with what is called as VDM, Visual Data Transformation Mapping. After Dell Boomi, this is the first or this is the second. After Dell Boomi, this is the first complete cloud transformation utility available. The beauty about this transformation utility against any other ETLs that you have used is it versions by time. It versions transformations by time. So this is basically what is it. And as a leaving note, I would cover. What did we miss out? So anyway, so I think that's what it is. We can take questions at the booth. We are excited with what we are doing right now, and at last we've got some great recognition over the last 1 month with the kind of customers we are working with, and we hope to enable a lot of you. The technology we provide is fastest to adapt. This is the first working demonstration first working demonstration that you can find on in complete demonstration to do your compliance, to do your tax determination, to do your one master data. There is probably, everybody else probably shows you something, or they're probably making you wait. One thing for you to consider, if they're taking so much time to develop, will they be able to change it for me when I need it, right? The reason we are able to develop is ours is first of its kind GRC platform on which business rules is a content, metadata is a enabling thing. So we do applications on a platform, and that's why we are faster. We don't code these rules in Java. We don't code these rules in .NET. These are rules and metadata placed on an application, right? Thank you, gentlemen.